Target. Is this a stock you should buy right now? That's what we're going to try to answer here in this analysis video. I like to simplify things, and I'm going to discuss 6 metrics in this analysis: earnings growth, PE ratio, dividends, return on equity, free cash flow, and intrinsic value. They're then put on a 0 to 99 grade scale so it's easier to visualize the different numbers I'm going to throw at you in this video. The first 5 metrics mostly deal with how good of a business we have. No point investing if it's an undervalued piece of crap. That's why I save intrinsic value near the end. Earnings growth is by far the most important metric. A company that doesn't grow doesn't survive for long. Target has average growth at 4.75% per year looking forward. Around average, but better than anything less. For PE ratio, most people look at its valuation metric. I don't base my intrinsic value on the PE ratio. The PE ratio to me is a measurement of hype. Too high and there's just too many eager eyes on the stock. Too low and we might have a hidden gem. Target has also an average PE ratio at 22.5. While many see a fair valuation, I see a fairly hyped stock that is right at its sweet spot. Dividend should be an obvious metric and something a lot of people ignore. I'm going to put it out there. If you buy a stock that doesn't pay you anything, you're speculating. You're not investing. Target has a nice dividend yield at 3.33%. A battered down stock has opened the doors for a pretty good payout just for holding. For return on equity, it tells me a lot about the management. It shows me how efficiently my investment dollars will be treated if I were to buy the stock. Target has a great management with an ROE of 24.5%. Money is being utilized and your investment, if you so choose to invest in it, is in good hands. Free cash flow is my way to quickly evaluate how dominant of a company we're dealing with. The more cash available, the better opportunities to buy up other companies, the better to research, and more money for marketing. Target has no cash flow, in fact a negative to the tune of negative $1.51 billion. Expected for a big box retail, but as a company, not good. Not good at all. Okay, as I said, these 5 metrics we just went over tells me what kind of business we're dealing with. With a business grade of 61, we're dealing with an above average business. Good dividends and ROE with average growth and hype. But let's see about the price. But before we get to our intrinsic value, consider joining my Patreon and get access to every grade from every company I've analyzed. It's updated all the time. Go to patreon.com/GrowthShares or click on the link in the description. As I said, Target is decent, but we've got to check out the price and see if it's worth buying. Nonetheless, Target is worth $152 per share. Right now, we have a stock that's slightly undervalued. Not too bad. And now that we've got all the numbers down, we need to put it all together and get our final grade. Target has a final grade of 62, and that makes it an above average long-term investment. For me, the business is harder to change than the price. If Target can drop down a little more, we can be nearing a good investment. But hey, after this video goes out, anything can happen in the next few days, weeks, months, even years. But long-term is always longer than you expect. Keep in mind, it took Warren Buffett 45 years to become a billionaire. Invest wisely, and as always, take care of your money.